Hey, what's up, family? It's your boy Jalen here with Black Earth Renaissance with another episode of Explained. Today, we're going to be speaking about the 4 different ways you can get into investing in a real estate. This is a common question we get on the page, so we want to help you guys out. Let's get right into it. The very first way you can start investing in real estate is by becoming a landlord. So you basically are going to buy a rental property. You can buy a single family property, which is basically a home, a 2-bedroom, 1-bath, 3-bedroom, 1-bath, 3-bedroom, 2-bath, whatever. It's just going to be a single family home on a plot of land, and it's normally for, like what it says, a single family. Or you can buy multifamily homes, which is something between a duplex, so you can have the duplex, triplex, or fourplex, and you can invest in that. And that's another way you can become a landlord. Ideally, you would rent these properties out in the hopes to start generating some cash flow, generating some income off of people living in these properties. I'm going to give you the pros and the cons of being an owner or a landlord of a property. The 3 pros that we're going to give is: 1, you gain the rights to income, cash flow, so you can start generating money, and that's how some people start to generate passive income and start to break away from their 9 to 5. 2, you'll be able to get the rights to leverage out the property, so you can start using that to fund other real estate deals, pay down different forms of debt, and different things that you can do once you start to own the rights of a property. And the last important pro is tax deductions. A lot of the expenses on single family homes are tax deductions, so you can get those as tax write-offs. And some of the cons of owning single family owned properties and being a landlord is you can have bad tenants. You can have vacancies, periods of vacancies, so you can go 3, 6, 9 months without a tenant being in that property, and now you're paying on a mortgage coming out of pocket. Lord, I don't know why that took so hard to get out of, but coming out of pocket, and you are not generating any kind of cash flow, and that could be hurting your overall income. And the last thing is expensive repairs. So with expensive repairs, that would be anything like a roof, anything like foundational issues, maybe a HVAC, something that a new investor probably wouldn't really be too ready to get into the first 6 months to a year of them renting out a property, paying down a mortgage, and things like that. So that is your first way to get into investing in a real estate. Your second way is real estate investment groups. So a real estate investment group is anything with a private firm. You can do it with a group of friends. There's crowd funds. So anything of that nature. And it's basically where you're investing some cash, some capital. If you take 10 friends, you buy $100,000 property. Each of you guys or you girls, you put in $10,000. Now you own the $100,000 property, and you're able to start generating a smaller amount of cash flow than you would if you were to own it by yourself. But you're able to start generating cash flow. And one of the pros is you don't have to necessarily be directly involved in it. Y'all can hire a property manager, or you can actually just let one of the people in the group manage the property, so you guys save on some of the expenses if you were to hire a property manager. And some of the kinds of that also is vacancies and mismanaged properties. You guys could get into a bad disagreement, something goes wrong with the property, and it just totally goes south from there. Number 3 is flipping properties. Flipping is another form of investing in real estate. And with flipping, what you're doing is you're taking older properties, dilapidated properties, anything that might need some work, and you're renovating it. And what you're doing is you're renovating it in hopes to appreciate the value of that property. So you could be taking a house that you bought for $60,000. Most flippers, they follow this 70% rule. So they want to buy the house at what it's worth. They want to buy it at 70% of the cost. But that's another video for another time. But you want to buy that property at a lower price. You want to fix up whatever is wrong with it, whatever type of issues are going on with it, and you're going to actually modernize it, make it look a little bit better, like I said, so you can force appreciation through that house. And you're looking for, that's more of a short-term investment, and that's some of the pros of flipping. It's a short-term investment, and you also have the ability to make a huge upside potential gain in a short time. Some of the kinds of it is unforeseen repairs. So you could think, I only have a roof to do, I only have this to do, but you actually might have more than what you expected to get on. So now your project budget just got a little bit larger. And you also, some kinds is the project lasts too long. So say you guys, you expect to flip it in 6 months, but it actually ends up takes you 12 months to flip the project. So now you're actually paying on the mortgage while you had to put up the money, the capital in the beginning. And so that's just some of the things that comes with flipping. And of course, there's always more. And the last way you can get into investing in real estate right now is REITs, real estate investment trust. It's basically like trading a stock that holds the right to real estate properties throughout the country. And what they do is they must issue out 90% of their revenue back to their shareholders on these properties. So you can invest in a REIT, and this REIT may own 500 Popeyes throughout the country, or this REIT may own malls throughout this country. This REIT may own different businesses throughout the country, and that REIT will start generating money. It's another way for you to say hands off. You can get in it quickly, you can get out of it quickly. Like I said, it's just like investing in the stock market. We hope this video finds you very well. I hope this was informational. Also, be on the lookout for our financial coaching calls held every Tuesday at 7:30 p.m. Central Standard Time. We'll be going over different ways to invest in real estate. We'll be speaking about financial education. We'll be going over taxes. We'll be going over a vast majority of different topics, and it won't just be us teaching it. We'll be having some friends from our podcast come through, and they'll be dropping game. They'll be sharing their expertise, and they'll be providing the value to you guys. And it only starts at $20 a month for a minimum of 1 call per week, with an upside of maybe 4 calls a week. So y'all let us know if y'all interested in it. Peace.